Hello again, traders. This is part 6 of this video series, where we describe a workflow process undertaken within Strategy Quant X and Quant Analyzer to produce diversified systematic trend following portfolios for a 21 market Forex universe. In our last episode, which was episode 5, we had finalised our testing within the Strategy Quant X environment and had produced 31 potential breakout strategies which had withstood a battery of rigorous testing methods, and now we are getting to the pointy end of the exercise where we want to assess which candidates we will deploy in a diversified portfolio. Now, to simulate more realistic trading conditions, we have taken these 31 solutions to the MetaTrader 4 environment and have undertaken backtests of these algorithms. Now, in this episode, we will be taking these results to Quant Analyzer for further analysis and to determine the actual algorithms we wish to select for our final trend following portfolio. So here we are back with the MetaTrader 4 platform, having completed the individual backtests of the 31 solutions. And we have saved the MetaTrader performance results in a local folder, and we now wish to load them into Quant Analyzer. So we do this by selecting the Load Report menu option within Quant Analyzer and then selecting all the MT4 strategy tester reports that we have already stored in our bulk testing folder. Now, once we have selected all the reports, we then select OK and just need to ensure that the initial deposit applied is set to our desired capital amount we wish to trade our portfolio with, which in this example will be $50,000. And then we can select the continue option to load each report into Quant Analyzer. This may take a few clicks. Now, I have already jumped ahead and have done this already, so you'll now be able to see 31 backtest records in our listing and their performance metrics. Now, in the past episode, I mentioned how important it was to test these SQX-generated solutions on the platform you intend to live trade with. This is to ensure that the algorithms themselves are free of execution issues relating to your platform, and also to incorporate more realism into the results by ensuring that all trading costs are included in the result. Now, the performance results produced by Strategy Quant X do not include holding costs, which in our Forex world we refer to as swap costs. And if you have trades with long average holding periods, as we do, the impact of holding costs can be material in terms of their impact on the total result. So to see this, we will rank our 31 strategies in terms of their net profit result from best to worst. Notice that approximately half of the 31 results do not achieve positive expectancy over the test range, when in fact they managed to pass the rigorous testing already undertaken in SQX. Now, the reason for the overall negative expectancy can be solely attributed to the fact that the edge on these strategies was already very weak and not sufficient to allow for the impact of the holding costs, and therefore turn potentially powerful strategies into losing strategies with no definitive edge. So we therefore delete any of the tests that have produced a negative expectancy over the long-term test regime. And to do this, we select all the strategies, then uncheck the strategies you do not wish to delete, and once it all looks good, then click on the delete button. So now we are left with 15 strategies that have at least been able to demonstrate positive expectancy over the long-term backtest, including these holding costs. So it is now time to compile a sub-portfolio of breakout strategies that we will include in our ultimate portfolio. Now, just before we attempt to compile our portfolio, we first need to define how many breakout solutions we want to use for each market in our 21 market portfolio. Now, this video series focuses on developing breakout strategies for our trend following portfolio, but we have also developed a similar workflow model which is used to develop alternative trend following models that are not specifically breakout solutions. So at the end of this entire completed workflow process, we have solutions of 2 different classes of trend following model for 21 different Forex markets, and these comprise breakout strategies, which have been the subject of this video series so far, and alternative generic trend following models, which are explained in more detail in our forum to our members. Now, these 2 classes of trend following model are used to achieve 2 broad objectives. Firstly, to catch all major trends of significance, which is essential if we are seeking to trade within the fat-tailed environment. This therefore ensures by using breakout models we never miss a trade of significance, or we avoid what is referred to as a type 2 error. And our second objective is that we want to achieve wide system diversification of trend following model, which therefore allows us to tackle a broad class of different forms of trend within these fat-tailed environments. So given that we'll be undertaking workflow processes to develop 2 different groups of trend following models used across 21 different Forex markets, we need to settle on a defined number of trend following solutions to use, as the realities of our retail world have limitations we need to observe. For example, our broker Pepperstone does have limitations to the number of trades that can be active at any one time, which in this case is 200 trades. So we therefore need to ensure that the final number of algorithms that lie in our total portfolio produces less than this number. We could of course overcome this limitation by using multiple accounts, but we are keeping things simple in this particular discussion. So for our purposes, we have settled on the following numbers to use. We will be seeking to find 2 breakout strategies per market and 5 alternative trend following strategies per market. This ensures that we can achieve our broad objectives of this workflow, and this therefore produces a total of 7 solutions per market, of which will give us a maximum possible trade count exposure of 21 markets across 7 solutions, or 147 trades, or 147 separate day trading algorithms that are used in our portfolio, which is well within Pepperstone threshold limitations. Why only 2 breakout strategies and yet 5 alternative trend following solutions? Well, you will find that the breakout strategies themselves tend to have fairly high levels of correlation, so we reduce our concentration in breakout method to increase our diversification in alternative trend following method. This therefore tends to give us more diversified, less correlated trend following portfolios. Anyway, enough of the numbers. Here we are back at Quant Analyzer with 15 breakout strategies for AUD JPY, and now we only want to select 2 of them for our final portfolio. How do we select the best risk-adjusted performers that also offer the lowest correlation? So to do this, what we do is we select the 15 breakout solutions in the listing and then click on the Portfolio Master option of Quant Analyzer. Now, what this processing function does is it evaluates the optimal portfolio arising from the inputs provided and the number of final solutions you want to include in your portfolio. So here is how we use it. First, we select the brute force option as we want the process to assess all possible portfolio permutations. Now you will see how we have selected 15 strategies for testing purposes here. But we need to now select that we only want to pick the 2 best solutions that in combination offer the greatest risk-adjusted performance metrics. So we type 2 in the minimum and maximum number fields. Now notice how the number of possible portfolios now changes to 105 possible permutations. This would take a long time to evaluate manually, so this is a very handy function of Quant Analyzer that allows us to perform severe data crunching very quickly. Now I want to rank portfolio results by the return to drawdown ratio, and I also want to ensure that I apply a maximum allowed correlation of 0.3 as a validation filter. You may need to adjust this up or down if the settings are too stringent and do not pass any option, but in most cases 0.3 is a pretty good level to apply as a default. Now this bit is important. We only want to select the date range horizon of our recency look back. This ensures that we are selecting the better options that have expressed recent outperformance. So we set the date range for between the 1st of January 2015 to the 31st of October 2020, about a 5-year look back. And now we are ready to hit the compute button. In this instance, the processes we are undertaking occur in the blink of an eye, but dependent on the number of permutations you are assessing and your initial number of solutions you want to test, it can sometimes take a lot of time. But now, here we are, we go to the Portfolio tab and we arrange it so we can now see the results produced. You will want to sort the listing by return to drawdown ratio. And also you may need to expand and contract columns so you can see the data. But in this instance we have a result, and it demonstrates that the best combination are the magic numbers 0.143758 and 0.1260942. These two solutions provide the best return to drawdown ratio over the last 5-year look back. So by using the return to drawdown metric as our ranking criteria, we are also by proxy ensuring that the combination also has the optimal lowest correlation configuration. So now let's have a look at the equity curves of each strategy and how they perform as a combination. To do this, we double click on the top rank combination and then click on the Analyze tab and then select Equity Chart. Now let's look at the portfolio display first. The dark blue equity line is a combined result, and you will be able to see the component return streams as well. Now let's turn off the portfolio view and look at the sub-equity view that only looks at the individual return streams themselves. What you'll see is how these two different breakout return streams offer significant correlation offsets. You can see periods of time where drawdowns in one return stream are being offset by draw-ups in the other return stream. These correlation offsets are what produce these better return to drawdown ratios when both solutions are compiled together. So what is evident is that these two different breakout solutions operate during different market conditions and are not highly correlated with each other. And if we therefore combine them, we are getting the best of both worlds in one effective combined return stream that we can then include as a robust breakout set of two strategies developed for our AUD/JPY in our final portfolio. So hopefully this gives you a quick overview of how we use Quant Analyzer to assist us in compiling our diverse portfolios. So now that we have our result of the optimal two breakout strategies that we will be reserving for our final portfolio, we want to save these two results in our Portfolio Master file folder. So I'm looking now at the magic numbers 0.143758 and 0.1260942 in my Portfolio Master directory. And you'll see how I've created a subdirectory for my trend following portfolio, and within that subdirectory I create market folders where I then save the individual strategies that we'll be including in the final portfolio. Now that I've settled on my two choices of breakout strategy for AUD/JPY, I can now go back to strategy Quant X and reduce my final listing to these two strategies. So here I am back at strategy Quant X. I now select the entire listing in the final data bank, and then deselect the two magic numbers that I want to keep, like this. Now I click on the delete button and we find that we are now left with the two optimal strategies that we'll be using in our final portfolio. Now before we leave this episode, what I would like to do now is have a quick look at the code itself to see what is under the hood of these strategies and that they reflect the design logic that we embedded in these strategies during the build strategy step. This is a final check, if you like, that these strategies are now good to go. So let's have a look first at magic number 143758. So I double click on this strategy in the listing and then select the source code tab. To make it easier to understand, I then select the pseudo code format. So as we read through this code, you will see that this strategy uses both the ADX rising condition and the Donchian breakout channel for its entry indicators. This strategy uses a Donchian lookback of 75 daily bars and an ADX rising period of 85. It also uses a stop loss and a trailing stop, which is a requirement of the design. The long entry and short entry conditions are both symmetrical in nature, and the logic is sound in accordance with our design rules. So for this strategy, we're good to go. Now let's look at magic number 1260942. This obviously is a bit more complex and uses two Donchian channels of different lookback, including the ADX rising condition. But remember in our entry parameters that we had 2 to 3 conditions? Well, in this case it's used 3 conditions. But the parameter settings are very different in this strategy to the prior strategy we looked at. The long entry and short entry conditions both look reasonable, and we have stops and trailing stops in place, so it also appears to have ticked all of the boxes of our design rules. So another big tick for this strategy. So that's it. We are now finished with our workflow process used to develop breakout strategies for AUD JPY. Now what I want to do is save the entire workflow by going to the project listing itself and giving this workflow a relevant name. So this is the workflow we have been discussing, which SQX saves as a template automatically, and now I want to rename this workflow with the suffix AUDJPY, like this. And you'll see that we have saved strategies that we have created in our data banks. So in this series of videos so far, I've provided a detailed overview of the workflow process we undertake to develop breakout strategies for, in this example, AUDJPY on the daily time frame. What started out as 3,000 data mine solutions now ends up as simply 2 final solutions which we will be using in our final portfolio. Now remember, what I've shown you to date is for AUDJPY. You therefore need to undertake this same workflow process over the 20 other markets of your Forex universe to develop 2 breakout strategies each per market. So in total, your workflow process used to generate breakout strategies should generate 2 times 21 markets, or 42 separate breakout algorithms that you store in your final portfolio directory. Now, given that we have already created our workflow process for AUDJPY, which has been the subject of this video series, we fortunately do not have to reinvent the wheel and do everything again for each one of our 21 markets. We simply clone this AUD workflow by going to the project listing and using the clone project function of the nominated workflow, and a new cloned workflow will be produced. I then relabel it with a new market I want to test, which for example might be AUD New Zealand, which is the next market I want to test. Now I therefore need to go into the project itself and configure the configuration settings to AUD New Zealand and not AUD JPY, and also check that the test date settings and spread settings are correct. So I will show you how we quickly do this. So we are back in the project configuration screen now of AUD New Zealand, and I start with the build step. I simply change the market from AUD JPY to AUD New Zealand clone minute data. I quickly check the date ranges that they are correctly applied, and in this case we are good to go. Then I check the precision speed and cross-check the slippage against the default slippage for this instrument if I refer back to the data manager, and in this case I see the default is 4 pips or 40 points, so I change this and then just double check the other tabs of this step. So let's go to the trading options tab. This looks all good. Now let's go to the money management tab. Now all good. The cross checks tab. In this case we're testing for higher precision during this cross check, and the spread is good. And now the ranking tab, and all appears good. So finally the notes tab. Yep, that looks good, so we are done with this build strategy step. Now I do the same cross checks with the multi-market step and make sure that the primary market used is AUD New Zealand instead of AUD JPY, and so on and so forth. Just ensure that the settings for the new market are correctly reflected in the work tabs before you commence this new workflow step. Sometimes I may need to refer back to that original template just to check the original settings so that I can also apply them to this workflow for AUD New Zealand, for example. So once all the settings are configured, you can then run the entire process and you can take a well-earned rest while your PC does all the heavy work. Now for my PC that I use for this process, a single workflow such as that developed for AUD JPY using these breakout strategies might take about 3 to 4 hours to complete. But you will find that by simply modifying your existing templates that we've set up here, you can achieve a lot in a few days. We only undertake these workflow processes once a year, so undertaking these workflow processes takes a few days out of every year. But all the rest of the time, you are simply monitoring the performance of your live portfolio. Anyway, this is probably a good time to wrap up this episode. In our next episode, we will give a brief overview of the workflow process we undertake for alternative trend following models, but we don't want to spend too much time here as we don't want to give the entire secret sauce away. But if you want to know the nitty-gritty details of this additional process, you would need to become a member of our forum. But what I've demonstrated so far with this particular breakout workflow process, it should give you a good head start in understanding what you do and how to apply this process. What we'll focus on in our next episode, however, is undertaking a walkthrough of the 7 algorithm sub-portfolio of AUD JPY that we've just developed using Pepperstone and Ducoscopy data, and also reviewing the complete performance results of 7 algorithms per market applied across a 21 Forex market universe. In other words, the performance results of a complete portfolio comprising 147 separate trend following algorithms. So it's going to be an exciting episode next episode. So until then, trade well and prosper.